The interesting part, of course, is the depth of the cup. If you put this on a potential breakout level here, let's say we assume, roughly speaking, 75K-ish is the breakout level. So, and the depth of the cup, of course, is the low here at 15,500. So that gives you, roughly speaking, 50K, 53K on top of that breakout level, which would take us, to roughly speaking, $130,000 for Bitcoin at some point after that breakout here.
Hello and welcome to VRIC Media, the most trusted voice in junior mining. I'm your host, Ted Butler, and today I'm joined by a seasoned precious metal analyst of over 17 years, Florian Grummes. Florian is a managing director and founder of his own firm, Midas Consulting, where his mission is to help investors and traders to become more profitable and wealthier. Today, Florian has kindly agreed to walk us through the charts of commodities such as Bitcoin, gold, silver, and oil, in what I'm sure will be a technical analysis masterclass, given his experience. So, Florian, amazing to have you on at this crucial moment, and looking forward to getting stuck in.
Thanks for having me, Ted. It's a pleasure to be here. I'm also looking forward to this.
Great. So I think what we're going to do is basically I get you to share your screen, and we're going to start with Bitcoin, Florian. So I just want to provide some fundamental perspective first. Larry Fink, BlackRock CEO, has recently come out and said that Bitcoin will become as big as the entire US housing market. In other words, he thinks that Bitcoin's 1.3 trillion market size will rise dramatically to over $50 trillion, as is the current size of the US housing market. Now, in my perspective, the jury's still out on whether BlackRock's investment in Bitcoin will compromise the intended purpose, but there's no doubt that continued bullishness from who is the most important man in finance could certainly be conducive to higher Bitcoin prices. So, notwithstanding these fundamental factors, I'm curious to know your thoughts on Bitcoin from a technical perspective, and I think you believe it's shaping up quite nicely.
Yeah, I do. And I actually totally agree with what you just said. So I'm pretty much doubting the longer term outlook for Bitcoin, given that it's now in the hands of the big wealth managers, and basically the original idea has been, you could even say perverted, and it has nothing to do with it anymore. It's not your keys, not your coins. That's the main mantra that we've been always saying since the last 12, 13 years since I'm in Bitcoin. And it's the same issue that is there with the GLD, the gold ETF, where we also since 20 years nearly questioning whether really the holdings are there and everything's correct, right? And it's always the same thing that if the paper market's dictating the price of the underlying asset, it's always very questionable, the pricing in the end of the day. So, but anyway, let's talk about the technicals. All right. So before we start, obviously, I have no clue what I'm talking about. I'm cooking with water like everybody else. So people, please take responsibility for your own results. That's also good in life. Taking responsibility for everything that happens to you gives you actually the leadership, and you're in charge. So first we start with Bitcoin. And I've been rather a little bit cautious here since spring. I said there was way too much euphoria and optimism. But of course, we had this very nice leg up here out of the bear market low in November, December 2022. And if we do some chart analysis here, so obviously the main kind of thing in the Bitcoin chart is this massive resistance zone sitting around $73,000 to $75,000 at the moment. And we have this beautiful cup and handle pattern in the making in the Bitcoin chart. So this is a PowerPoint presentation. Don't nail me here on the exact kind of like details of the charts, because it's more like to show what actually is going on, and it's not a technical analysis program, it's PowerPoint. But the takeaway is we're in this big cup and handle pattern, and as you can see, mainly sideways action here since spring. And now it looks like we've seen the lows here in early August at slightly below 50K. And this might take a little bit longer. I mean, you as a British have a better understanding of a good cup and handle tea kind of relationship, right? It could take that this handle could take maybe a bit longer. Maybe it's already done. I don't know. But let's say worst case is probably a few more months here, sideways kind of action within that handle. So that means not too much downside anymore. And of course, as soon as Bitcoin is able to break above this red resistance line here, then I think that's the trigger that everybody's waiting for. The interesting part, of course, is the depth of the cup. If you put this on a potential breakout level here, let's say we assume, roughly speaking, 75K-ish is the breakout level. So, and the depth of the cup, of course, is the low here at 15,500, and this is probably here around 73,000. So that gives you, roughly speaking, 50K, 53K on top of that breakout level, which would take us, to roughly speaking, $130,000 for Bitcoin at some point after that breakout here. That's a very bullish outlook. It's still 100% from where we are right now. I think that's a pretty good return for most investors out there. Of course, it's not what we are used to from Bitcoin in the past, but of course it's growing up. You cannot, I think, expect 10x anymore from such a asset now, which has already with its ETFs. I mean, there is mass adoption, so there's certainly a lot of people also taking those gains at 100K at some point. So, well, that's basically the big picture for Bitcoin right now. As well, we have this green uptrend line here, which basically tells us, below 45-ish kind of K, you would want to become more cautious in Bitcoin. But until then, I think everything's fine. As I said, even if this handle here maybe needs a bit more time and maybe runs another 2, 3, 4 months, wouldn't be a bad thing. To look out for is here when the breakout is happening. Okay, so that's the main situation for Bitcoin. And if we zoom in and look over the last few months, so that's the whole kind of sideways consolidation. Actually not a big drawdown here, 49,500 or something. I mean, that's still very manageable, I would say. Overall, it's kind of a triangle here. You can see already we're making higher lows finally. Also, the 200-day moving average finally is below Bitcoin again. So I think the last few days, especially since Thursday, since this little last bear trap here below 60K, I think some more, maybe the last few weak hands have been shaken off here. So yeah, it looks more and more bullish. Again, here you can see we need a breakout above this downtrend line here. Let's say the 67,500 resistance zone. If it can jump above that, then it will trigger obviously the run towards the 73,000, the big line that I showed you on the larger time frame chart.
Right.
So, yeah, it looks more and more bullish. I think it still will take a bit more until there's real momentum, but it's coming. I think the chart is more and more promising. And you can see here also with the stochastic oscillator, we have a nice divergence. So it didn't confirm that lower low here in the price, and nice rally over the last few days. So I think it's time to be fully invested again in Bitcoin. I think the time is now. Most likely we will see a nice run higher over the next few months. I mean, if you look at the seasonality, generally speaking, early mid-October is where you see the trend change or the turning point for Bitcoin. And I think we are right here. So you want to be fully invested again. I think also that means ramping up allocation for the altcoins and the crypto sector in general. I don't think it's going to be that easy like in the past, simply because there's just so much altcoin or shitcoin token supply. And so many stories and so many bad players, etc., etc. But I assume some of the large coins like Solana should do really well. I actually think that Solana can easily go to $1,000 in this cycle. So that would be actually giving you really nice returns. And probably some of the tokens that have done well in the first part of this cycle, like Fetch AI, for example, should do well in this second part of the cycle as well. So yeah, it doesn't take much for Bitcoin anymore.
Interesting. Yeah, no, thanks, Florian, for that. 130K Bitcoin. Wow.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
So moving from digital gold to real gold, I want you to elaborate on a quote from your recent analysis for Midas Touch Consulting. So you stated gold has taken a breather in the past 3 weeks and has come down by about $80 from its new all-time high of $2,685. The overall rally remains intact, but a somewhat extended pause should not be surprising. We assume that the pullback will serve as a springboard for the next leg up. So obviously, this is not the gold is going to 10,000 US dollars that you might see on other YouTube channels, but it's an objective assessment. So please speak further to that if you can.
Yes, thank you. So look, I mean, I am in the very long term, big picture. I am in the 10,000 gold camp as well, right? But it doesn't help you. I mean, if you want to be a successful investor, you need to understand the different time frames, and holding a physical ounce of gold with the target 10,000, yeah, maybe could be an approach, but it just gives you way too much hope and less real facts. And I think what I have learned over the last 25 years in gold is that it always takes much longer than we all assume or anticipated. So what gold has been doing over the last 13 years is also working on a big cup and handle pattern, even a much larger than the one that Bitcoin is working on. So if we go back, this chart goes back to 2011. We have this former massive resistance zone here in gold. So that is the top in 2011. That is the bear market or correction low here in 2015 at $1,045. And then we had 1, 2, 3, 4 times gold bumping up, running up against this resistance zone here. And finally in February, it managed to really break through. And since then, you can see how much energy has been unleashed here, and how I mean, there is no stopping anymore gold, right? I mean, it's just running higher. And something similar is to be expected once Bitcoin is breaking out of that cup and handle pattern. Just the fact is that in this one here for gold, I mean, there has been even more energy being compressed and stored over the years, because it took gold basically 13 years to get out of this pattern, while Bitcoin is basically working 3 years on that pattern, right? So we have this big cup and handle pattern, and we have the depth of the cup. And if you put this here on the breakout from February, gold should rise round about to $3,080 to $3,100. And I think we are on the way. I think it's just a question of time. It's not missing too much, actually. We're trading 2,650. So yeah, another $400 basically, and we're already more or less there.
Right.
And as you can see, this rally has been building now over the last 2 years since these lows here in 2022. And usually these rallies are building over time, and towards the end of a rally, it's getting more and more vertical. And then you have a spike within a few days or weeks when the public opinion completely is suddenly focusing on gold, and everybody has FOMO, missing out, wants to participate, and that's usually where the top is coming. But I think it still looks good. The rally is still running higher. I still think we have more upside in gold. And again, the big picture kind of analysis, you see that this is also like an ascending triangle here over the last few years. And we have already reached the first target out of the depth of the handle, which was at 2,535. And that was my first target. I gave that last year. And I tend to do things step by step, nowadays with some more experience. I think let's work from one target to the next, and then at some point we will come to 10,000, but not like
right. Yeah, let's not get too ahead of ourselves.
Exactly. So that's the big picture for gold. I think it's still bullish. We still have more upside.
Yeah.
Textbook kind of like would tell us that at some point we should expect a pullback towards this breakout here. But apparently it's not happening now. Maybe it will never happen. I don't know. For now, we are still moving higher. I still see this target very likely in gold over the next few months, maybe until end of the year or next spring. That's the target that I have for gold.
Yeah, no, I would absolutely agree with that, Florian, to be honest. I'm on the same page as you there. I do want to ask about what our mutual friends at the In Gold We Trust report call performance gold, otherwise known as gold mining stock. So we've got the prospect of this blowout Q3 earnings season with majors like Newmont, Agnico Eagle unveiling the effect of this higher gold price. We've also got the market pricing in a 50 basis point rate cut by the Fed and the next meeting in November. So with this fundamental side in mind, what's your take on GDX and GDXJ right now? And where do the gold miners go from here?
Right. So, of course, I mean, GDX and GDXJ are always following gold. And I still have one more chart here on gold, which would be more of the little bit more short-term kind of view as daily chart. And we can see, as you mentioned before, my outlook was this pullback could be a springboard. So we had a quick pullback of $80 in gold last week, but you can see how quickly as well the bulls came back into the market.
Right.
We have a buy signal here on the stochastic. That's the uptrend channel. Was not really surprised that gold kind of like stopped here at this new all-time high at 2,685. And yeah, maybe it takes some time to move sideways, or we have a bit more upside in the short term here, 2,700 to 2,720 maybe. You can see how beautiful bullish the moving averages are, the 200, the 50, and the 18-day, they're all moving higher.
Right.
So any pullback will certainly meet a lot of support or new buyers. We haven't seen a test of the 200-day moving average for a very long time. It's far below the current prices. And I think if we would get a larger sell-off, it would most likely be already the 50-day moving average that would stop that and bring in new buying. So 2,580, 2,600 is probably strong support already for gold, which means that for the mining stocks, they are basically in a new environment, a new gold price environment. And I think that that is not yet being priced in. The GDX, which is more representative of the larger producers or larger gold mining companies, again, similar like what I said about Bitcoin before, a nasty little bear trap here in February, March, right before the start of the rally. Even a little bit of a lower low than the one in October. So gold found its bottom here. And that was at 1810. And back here in February, I think it tested 1985. So $175 higher already. The miners made a new low. So that basically spooked off a few more weak hands down here in February. And then, you have this nice rally since then. A little double bottom was the trigger. And we have an established uptrend, as you can see. We just recently tested it here. Again, very bullishly aligned moving averages. And the only thing is you could maybe say this looks like a bearish wedge in the longer term. So the upside might be a bit limited. But we are on a buy signal here, I think, with prices around 40, 10-ish this morning. Maybe down here 45. I think there is at least another 10% for that ETF over the next few weeks, maybe 2-3 months.
Nice.
it looks bullish, but there's this kind of like wedge, which is a bit of a, it has to be observed, let's say it like this, because the GDXJ doesn't have that kind of like bearish wedge. So actually the GDXJ, which is more like the junior miners, a little bit more speculative, found its low in October with gold together and then made a higher low in February. So probably makes sense to look more on what the juniors are doing. More reliable signals, I would say. And as you can see, established uptrend, and the ETF is far away from the support here. So there's a lot of support and until this uptrend would break. We can also draw a parallel trend line here. You can see upside is maybe a little bit limited here over the short term, but still everything is bullish, is trending higher here. And we have a new buy signal from the stochastic. So I think it's bullish. This is most likely moving higher. Yeah.
Great. Yeah. I know we're coming to silver. I do want to just give you a bit of fundamental perspective as well. So, I guess the question with silver is it's outperformed gold year to date, actually, with a 31% return. And it does typically lag gold, but we seem to keep getting stuck as it keeps trying going past $33. The supply demand situation has been long talked about. We've spoken many episodes talking about on this channel. It's unsustainable, arguably until a higher silver price arrives. So what's the chart telling you about silver right now, Florian?
Yeah, I think with silver, I call it a schizophrenic diva.
I like that.
Because it's just such a small niche kind of market, and you have so weird moves, and it's basically disappointing you all the time. But when it shows up, it's the king of the party, and like, or the queen of the party, I have to say. And it's the little brother of gold. But then again, at some point, it outperforms everything. It's the poor man's gold. It's a lot of things, and then again, it's been very difficult to hold on to it, even if you just bought it physically, right? Not so much in the sense that I mean, you cannot get any margin calls or anything with the physical metal, but just like this constant disappointing, and you look and watch what's gold doing, and silver is not performing, then suddenly it shows up, runs crazy for a few days or weeks, and then it sells off everything that it just made. And so well, you have to accept it. And for example, I'm not trading silver for exactly those reasons. I'm just buying it physically, stacking it for the last 24 years already. And if you're doing this over a long-term time, then it's okay. So on this very much long-term chart here, so that's basically here where I started staking. This chart goes back to 1972. Because I think for silver, it's really important to understand the very, very, very big picture. So we've seen a 3 and something year cup and handle for Bitcoin. We've seen a 13-year cup and handle for gold, and it looks like the mother of all cup and handle is developing in the silver market. And it actually tells us that this will take even more time. So you need to really bring an extra portion of patience for silver. But you have this obviously double top at $50. This is the 1980 kind of high. This is 2011. And if you draw a cup and handle here, that's how it looks. And obviously we are in this handle here, and you just have to understand it takes time. I think silver is on the way to 50. Most likely it would fail here the first time. Maybe it needs to pull back. We have to see how long this handle in the end of the day will really be. I think the proportions here are, it's actually a big handle already. So I think it's getting there. Maybe another 1, 2, 3 years, and we should break out here. And of course, if that happens, it will again unleash a lot of energy that has been compressed here over, I mean, we're talking 3-4 decades. So I think if you, very basic technical stuff here, but if you take the depth of that huge cup, 30-year cup, and you put it onto the breakout level, it should take silver towards $100. at least. And if you would take the handle here from, let's say, the Corona low around 11, yeah, it would already take us to $90. So $90 to $100 will be the next step after silver breaking out above $50. We're not there yet. It's still missing $18 or something.
Yeah.
$18. So I think it will take time. I can see silver running higher towards maybe spring next year, reaching that $50 level. Most likely, first time, second time, so third time, most likely will be a failure. We'll see a pullback, and then the fourth or fifth times should bring the breakout. And again, this will take more time. And if we zoom in a little bit, this is the price action since the beginning of the year. You can see that silver did a double low in January and February, and then started this nice rally, and has been running against the 32.50 resistance here since basically spring. At the same time, we have a nice uptrend established. Not to worry about this at all. There's still a lot of room here, so any pullback will probably stop at the 50-day moving average, or latest here at this uptrend, and there's also the 200-day moving average. So it's very much bullish aligned chart here, but the main takeaway is for the next few months, the next step, so to speak, the depth of this scanning triangle. If you put it on the breakout, you should see silver in the next step running towards 38-ish kind of dollars, and then maybe another pullback, maybe testing that kind of resistance, which we see right now, which then will be support. And then from there, probably in the last final spike, a vertical spike towards the end of this whole rally, it should take us to $50. So I'm also very optimistic for silver. I think we're going to see $50. But in the longer run, so everybody who's talking about 3-digit silver, I have to remind you, this will take much more time and you have to be patient.
Right. Yeah, it'd take a lot longer to resolve, for sure. Okay. So we've also been highly vocal on this channel about the opportunity presented by silver mining stocks in light of this forecasted rise in the silver price. And we do believe it's going to happen. Core Mining, $1.7 billion acquisition of Silvercrest this month. First Majestic acquiring Gatos Silver a few weeks ago. This is a great sign, this increased merger and acquisition activity. So does the technical picture reflect that, or is it not taking that into account?
Yeah, I'm super bullish on the silver mining stocks. So we have seen gold running higher now for 2 years. I think now the mining stocks have started to follow. I think silver also, but they are both lagging, and we know that silver will come to the party. It just comes late, and when it comes with full force. So this will happen. And if silver goes to $50, some of those silver mining stocks will explode and go 5x, 10x from where they are right now. And this can happen until next spring. You have to understand that generally speaking, 80% of the time mining stocks go sideways or lower. And that's not the time where I personally want to be invested, to be very honest. I'm more of a momentum guy. And I want to be in those 20% of time when these stocks go nuts. And I think we are in that period right now. And it will happen over the next few weeks and months. So you need to get in quickly, and you also need to get out quickly. So this usually is not a long-term buy and hold kind of investment, which we all wish for, right? But it's not. So going in quickly means the train has left the station already. You need to get on board no matter what. You cannot wait for big pullbacks anymore. Getting out quickly means once you see silver spiking higher, outperforming gold like crazy, showing up for the last few weeks, going to $50, maybe even an overshoot to 55, who knows. That's the time where you probably need to take at least a large part of your investment off the table and realize those profits. Because otherwise you might find yourself in a 1 or 2 year pullback, which then means you will give back most of the profits in these mining stocks. So that's something generally that I needed to say here. But the silver miners are looking good. They had a similar setup like the GDX. So we had a low in October, and they made not really a low, but still came back to those lows, and that was the starting signal basically. And since then, yeah, we have a nice uptrend established here. Looks generally speaking bullish, but you can also see there is an uptrend here, or a resistance. It could be also a wedge here, the larger silver mining stocks. But we still have more room here. And let's see if silver really goes banana, then, I mean, this can still break out here to the upside. So again, I think some of those silver mining stocks are destined to see massive returns over the next few weeks and months. What is bullish, little pullback here, immediately buyers came back in, we have a new buy signal, so that's bullish. The same is true for the junior silver miners. Again, here, tested that bottom from October again in late February, and since then, clear rally higher. Again, looks like a little bit like a wedge here. We have to see if they can break out to the upside. I assume more likely they will break out to the upside. Overall, it's looking bullish here. Yeah, no reason to say anything else at the moment.
That's good to hear. I mean, on the fundamental side of things, I know we're keeping it technical today. Do you see any headwinds that would suggest the silver price might be compromised, in the sense that if we have this hard landing that people are talking about, slowdown in demand from China, what's your thoughts on the fundamental side?
Right. Look, I mean, we haven't talked now about any of the macro kind of and fundamental perspectives that I have. I think we are in a melt-up phase at the moment. I think everything goes higher. Bitcoin is going higher. Cryptos are going higher. Precious metals prices are going higher. Mining stocks are going higher. And I also think that the standard stock markets like S&P, NASDAQ, the tech stocks, everything goes higher, because the Federal Reserve has started to lower interest rates, to cut rates. And that basically, as we've seen, triggers or allowed most of the other countries on this planet now also to have a bit more of a easing kind of type of monetary policy. And so we immediately see the Chinese coming out. Yes, they promised more than they actually delivered, like always. But I think that the Europeans will follow, the Australians, many of the South American countries as well. And we've seen already massive increase in the worldwide liquidity in the financial system, so to speak. And I think that will continue for a few more months, maybe even half a year, maybe into spring or summer next year even. Best case would be summer next year. Minimum case, I would say, until end of the year. I think everything's bullish. But then I think afterwards we're going to see a nasty crash, and something that could quickly look like the financial crisis in 2008. And that might be triggered by simply profit taking initially, like if these things really go bananas, like I said before, in the next few weeks and months. At some point, people will take profits. At some point, the market will run out of new buyers, and then these markets can turn around very quickly, very violently. And most likely, we will then learn and see that the US central bankers have been too defensive and have been too slow and have been waiting too much. And then we might quickly find ourselves in a deflationary environment where everything's crashing. And in that kind of environment, you can see gold. I mean, I said it before, textbook like pullback to 2,100-ish. That could happen, and that would be something that we've seen in the financial crisis in 2008, when gold fell from 1,035. It made a new all-time high in March, and it fell to $680 by November. 6 months later, it basically had lost 35% or something.
Right.
So that can happen in such a liquidity crunch environment or scenario. And I wouldn't be surprised to see that, because I believe that once the Fed is forced to continue lowering interest rates, the market might change its thought process, and it might then say, like, is it really that bad that you constantly have to cut rates so dramatically and so fast? And that means that the psychology of the market has changed. And at that point, I think the central bankers probably have lost control of the markets. So that's probably in store, or could be in store next year. Obviously, I have no crystal ball, so we're talking about something that is not evident at the moment. But that's one of the scenarios that I have in mind, and that would also mean that most of your mining stocks then will get annihilated, of course. So again, that's why I said if silver runs to $50, you need to get out of it, and then also make sure that you're patient, sit on your hands, and don't do anything for at least a few months or a year, because this could get actually really nasty later on. But towards the end of this year until spring, I think there's no worry. Just keep in mind, you need to have a strategy for your exits. That's very important. And obviously, even if such a drastic scenario would indeed come to reality, you don't sell your physical gold, right? Because the situation is too complex nowadays. We have geopolitical tensions, we have surveillance everywhere. The financial system itself is very unstable. So I would definitely not suggest to sell any of the physical gold. If you've been suffering with silver for many years and you want to take some profits at $50, okay, maybe why not? I wouldn't be surprised to see it coming back to 35 or 30-ish at some point. Yeah. But the main point is really anything more speculative, like mining stocks, tech stocks, any leverage positions, all this has to be sold at some point if we see this vertical spike. And again, if this happens, of course, the mining stocks and especially junior silver mining stocks will suffer. To come back to this chart that we still have open here. So that's my fundamental outlook basically for next year. Melt up now, then probably a crash, and that with some delay because the central bankers will have a hard time realizing how bad probably the situation is. But once they finally realizing it, they will print more money than any time before, and that will take us on that street to gold reaching $10,000 at some point in the 2030s, maybe, you know. So, but that's still like step number 3. So let's take it step by step. As I said, for now, everything looks very bullish, and I think the silver junior miners can be one of the best investments for the next few months.
Agreed, and I think that's the important thing, is to have that dose of realism in mind, that, you know, it's important to, you know, not hold on for too long, but in the sense that we are approaching crack or boom territory, and the potential for these hard assets like gold, silver, Bitcoin is enormous, especially until spring. But one of the commodities that's not so bullish in the short term is oil. And I wanted to ask you about that before we close. It's gone down about 2%, Brent crude, in reaction to concerns about weaker Chinese demand. Also, Prime Minister Netanyahu telling Biden that he would rather strike military targets than oil or nuclear facilities in Iran, I think had something to do with it. But in my understanding of the technical side, we're also entering the most seasonally bearish window of the year for Brent crude, as prices tend to drop in October and November. So, obviously, a sustained downtrend in energy prices would assist the Federal Reserve's inflation fighting efforts and perhaps bolster Kamala Harris's odds in the run-up to the November election. We've also got the COP29 summit on November the 11th, which will be an important informant for the market. But curious to know, Florian, what's the chart telling you about oil right now from a technical perspective?
Yeah, I mean, we can talk obviously a lot about the oil market and how it is connected fundamentally with basically everything that happens on this planet. And it is telling us that the demand is not so strong. Otherwise, it would be trading here at around $70 dollars or a little bit higher. I mean, you can see we have this support here, and we have this clear downtrends basically since early 2022. That's a descending triangle. So that is rather a bearish formation. And all that it takes is like breaking these support levels here at some point. So you can see like 1, 2, 3, 4, 5 times maybe soon. If it breaks, again, a measured move, probably here down to 57 to 60-ish kind of dollars for crude oil. I've always been of the opinion that for the West, if you would want America and the NATO to win that East-West kind of situation, they would have to basically come up with as much oil as possible to reduce the price. And so that would bring massive economic challenges to Russia. And I think it took them a long time to realize that all these sanctions were completely stupid. The only way forward would have been like produce as much oil as possible. It would also help with inflation, like you rightly said. So, but at the same time, the demand situation that we're seeing here right now is obviously weak. The market is apparently not pricing in the danger of any big attacks on Iran's oil production. So, it looks more bearish than bullish, and I wouldn't be surprised if this breaks down here. And by the way, I mean, if that would happen over the next few weeks and months, that would be obviously give an extra kicker to your mining stocks and to the general economy as well. And it would lower inflation, and it could bring in that, so to speak, last fuel for this rally in the general market as well. So yeah, oil looks weak here. Yeah.
Interesting. Yeah. Okay. I do want to ask before we finish as well about just kind of some general advice, Florian, about how to trade without getting too emotional. So many people, certainly my age, have been chasing these crypto speculative assets and often getting stung, and then, you know, leading to real depressive episodes. And ultimately, it's so important to have that objective lens. And you talk about that a lot. How can traders learn to become objective and remove emotions from the decision-making process?
Well, I mean, I think it's not possible to get rid of your emotions at the end, right? But what you need to learn is to manage them.
Right.
That means you need to train your brain and your mind. You need to become more aware of yourself. You need to catch your emotions while you start feeling them. You need to, for example, I think meditation is a great way. I think spending time in the nature is a great way. I think staying away from too many crazy people and the television is a good way. You need to be on your own to really find your own rhythm and not getting distracted. Often in this herd kind of thinking, where you then have this fear of missing out, for example, always happens if you hang out with a lot of people and everybody tells you how much money they're making or what they have bought. And then you immediately have the feeling like, oh, I have not yet, I need to do it as well. And I'm missing out on something here. I think that is definitely something that you need to avoid. Generally speaking, you have to understand it takes time, screen time in front of the markets. You need to learn this. I mean, I bought my first stock in the mid-90s, so I'm doing this now nearly 30 years. And everybody that has survived as long as that is obviously, I mean, we all have big lessons, painful lessons learned. And the main takeaway is always you never give up. You always have to get up back on your feet, and then you continue, and then you can actually learn out of that lesson. And that's obviously one thing that it can be very painful if you lose money, and then it's nothing easier than just, okay, let's give up. It doesn't make sense. I cannot get this going. And that's exactly the mistake. So that's why I've seen lots of people giving up along the way. And I think that's also something that differentiates me. I'm not any smarter than anybody else, but I decided to not give up at some point and just continued. And then at some point, you start learning out of these lessons. And then finally you manage to not repeat the same mistake again. And then you make it better, and then you make money, and then, wow, you can make a lot of money in the market. And then it takes you all the way back, and you start again, and you learn a lesson another time in a different dimension. But you never give up, and at some point, you become independent, you become wealthy, and then, of course, being a trader and investor, it's a great job because it gives you so much freedom. You can make money wherever you are, and it's very fascinating to see these mass psychological movements. And but again, like I said before, one part of it obviously is also learning to be patient and to wait. That's something that I've seen a lot of time, especially also with the gold bugs and the gold mining stock investors. I have been waiting. I have not done too much in the mining sector the last 2 years because I missed the momentum. And maybe you were lucky and picked a few of those stocks that performed well, but the vast majority of mining stocks has done very poorly over the last 2-3 years. And I think this is now changing. And now is, as I said before, quickly the time to move in. So you have to be able to change your thinking, your attitude very quickly. You have to be an opportunist in the market, while in real life, when it comes to relationships, to friendship, to business, you want to stay away from opportunistic people, right? But in the markets, you need to be an opportunist, and you need to be able and willing to change and not stick too much to your thought process from last week, because maybe the market is telling you something totally different this week, right?
Interesting. So persistence, resilience, adaptability, these are all the ingredients. Great. I think that's a brilliant place to end, Florian. I really appreciate your time today. Please let us know where we can find you. Is that where on the screen there on your Telegram?
Yeah, so I had this slide here still. So we have a Telegram channel. It's for free. Everybody can join. It's kind of like a mastermind group of different investors from all over the world. Obviously, there's a lot of Germans, but we all speak English inside, and we exchange ideas about any markets. But main focus, of course, is precious metals, gold, silver, the mining stocks, and Bitcoin and some crypto as well, and geopolitical, macro, fundamental talk as well. I think it's a great group. It's kind of like a swarm intelligence kind of thing. I learned a lot of stuff in that group. Most of the important news, I see them there first and not anywhere else. So because just so many people contributing, it's free, and yeah, everybody's free to join. It's a free speech. Just behave respectfully, and it's all good. So that's the Telegram channel that we have, and then obviously we have the website. We have a weekly gold and silver chart books. We have daily calls on gold and silver, and we have also in-depth research on gold and Bitcoin every month. And you can find basically everything on Midas Touch Consulting and on Substack as well.
Brilliant. Yeah, that gives everyone plenty to get stuck into. Florian, thanks for coming on, and thank you to our audience for listening.
It was a pleasure, Ted. All the best for you and the viewers.